If you've been hearing and seeing a lot more about interest rates the last few days, then there could be good reason for it. We've seen a tremendous move in interest rates, and I'm going to show you exactly where they've moved and why they've moved and how much this could impact your home value or the price that you wind up paying on a home if you're currently in the market. So the reason this happened, if we look back to Wednesday, you can see here we had Federal Reserve interest rate decision and a Fed press conference. So not only did the Federal Reserve decide to keep rates where they were, they also modified their statement and forecasted what direction they may be going in and how soon they may be moving in that direction going forward. And basically what the chairman of the Federal Reserve, Jay Powell, said is that they are open to the possibility of future rate cuts, but they're currently going to remain data dependent and leave rates where they were. Well, the market took this as basically a foreshadowing that they were going to be cutting rates at the September meeting. So this is the first piece of data that you see here, and it's marked with 2 stars, meaning it's a pretty important date for mortgage rates. Then yesterday, the ISM Producers Manufacturing Index came out, and this measures the cost to manufacture the goods that we purchase here in this country. And you can see over here there was the previous month reading, there was the reading that was forecasted for yesterday, and then there was the actual reading. And what this lower reading means is that the cost for the materials that are used to produce the goods that we purchase have come down. And you can see relative to the forecast of 48.8, they've come down quite a bit. This also points to a calmer, lower inflation economy, which has also sent mortgage rates lower as it signals that inflation is coming down. And then a third strike here against higher interest rates, we should say, non-farm payrolls. These are how many jobs were created that are outside of the farming industry. And you can see here there was a huge miss on this number. The previous month, there were 206,000 jobs created. They were forecasting 175,000 jobs created. There was a huge miss, only 114,000 jobs created. So all this, when you take it in aggregate, let me show you how these kind of match up on the charts. You've got non-farm payrolls coming down since 2022. You've got unemployment rate starting to creep up, and now hit 4%. You have the federal decision, the Fed bank decision we were just talking about, Jay Powell's comments on Wednesday, sending rates lower. Then you have the economic data, the manufacturing index, sending rates lower, and this is shown as yields, but interest rates move in the direction of yields. And then you can see the jobs report today showing fewer jobs created than expected, sent rates even lower. So you have now this Fed funds rate expectations, and you can see that the federal funds rate is just expected to drop. People are already betting and trading based on that expectation that September there will be a Fed funds rate cut. However, you don't have to wait until September for the Fed funds, the secured overnight funds rate, to be cut. Mortgage rates are cut and respond much faster than that. So we can look right here and see the index at 6.4. What's remarkable about this is you're looking at the last year, and you can see we are now at levels that we hadn't seen since December 2023. This is actually a little bit lagging. We're back at levels that we haven't seen on interest rates since May of 2023. If we look back just here in the last month, this gives a better view of just how drastically interest rates have dropped and how fast. And you can see the last 3 months, just a tremendous move down. Why is this important, and what does it mean for you if you're a homeowner or a home buyer? So I'm going to go to my favorite real estate website here, and I'm going to click on financing, and I'm just going to show you from a interest rate standpoint how this could affect your payment or your home value. So if you scroll down here, we've got a pretty generic scenario set up, and you can play with this. But if we see at a 7% interest rate, let's look. We've got $3,198 on our payment with a 6% interest rate. If we go with a 7% interest rate, $3,461. So for simple math, we're talking about a difference here of roughly $250, right? So, well, if we say that rates stay the same and are at 6%, how much do we have to add on to the price of our house to get that same movement in rate? The answer is about 11%. So about an 11% difference in home price is the same difference that we've seen in this 1% interest rate move. And if we look back, have we really moved 1%, and how far back do we have to go to see rates at the 6.4% level? Really not that long, right? So to be at 7.4 or 1% move up, we really just have to go back into May, and we were already in May seeing rates at 7.4. So what does this mean if we've had a 1% decrease in rates? It's the equivalent of your home increasing in value by 10%, or if you're a home buyer, it's the equivalent of homes on the market becoming 10% cheaper. Ultimately, home buyers are purchasing based on their monthly payment. Home price can fluctuate somewhat, but ultimately, buyers are shopping for what they can afford. So as the interest rate comes down, the amount of house they can afford goes up. So if you're buying the same house and a seller hasn't adjusted for this change in interest rate yet, you're essentially getting the house for much cheaper than you would have been getting it for in May. Your purchasing power has massively increased, and here's the thing. This news is going to take several weeks to trickle out into the mainstream media, into newspapers and magazines, and for people to fully grasp it. So the good news is, if you're a home seller and you're placing your home on the market right now, this would be a good time to price a little bit more aggressively, a little bit higher, because as buyers start to call their lenders and get pre-approved, they're going to find that they can afford more house than what they're expecting. So you can price a little bit ahead of the market that way. If you're a home buyer and you're shopping right now and you got pre-approved a couple weeks ago, a month ago, 2 months ago, if it's been a while since you checked in with your lender, you will probably find that your maximum approval price has increased substantially, in some cases maybe by as much as 10%. Now, the expectation is that this rate will continue to improve throughout the rest of the year. There will be another big drop expected at the September Fed meeting, and then potentially in December another cut as well. But as you can see here, we don't need Fed meetings. We don't need really banner headline events for the mortgage interest rate to move. It's already started a slide which could continue well through the rest of this year and into 2025. If you haven't seen our presidential election year video about what the real estate market does on election years, you can see that the year following elections, there's generally more homes sold, a greater number of transactions, and home values typically increase. So more transactions at a higher price. And it's also historically consistent that from July to November on election years, we see interest rates decrease. So everything lining up for the real estate market to be getting some fuel dumped onto the fire. My recommendation would be that if you're a buyer, you go ahead and make your purchase decision sooner before you wind up in multiple offer scenarios again and bidding wars and having to waive appraisals and inspections. Take advantage of this quick change and do something sooner rather than later, and then look at refinancing maybe in 12 or 24 months if rates continue to drop. If you're a seller, get your home on the market sooner before other sellers realize that interest rates have come down and they can move and decide to dump their house on the market. Go ahead and take advantage of buyers' immediate increased purchasing power. Make your home available for them to purchase at a premium, even maybe above what you're seeing the comparable sales prices. As always, if you have any questions about the market, give me a shout. Visit donharkinsrealty.com. Take advantage of those tools. You can view every listing just like a real estate agent. You can apply for a mortgage. You can stay up to date with real estate news on our blog. And if you would like to get pre-approved for a mortgage, or if you're considering purchasing or selling a home, please reach out to us. Don't forget to like and subscribe and share this video with someone else that may find it helpful. And have a great week.